getting the lows, taking on your stop losses. So a bunch of liquidity. Right, liquidity. We'll talk about liquidity too further on. So stop losses. Takes out stop losses over there. Quick disclaimer, trading in the financial markets involves a high level of risk. Anything done or said in this video is not by any chance financial advice. Any action taken from the influence of this video, I shall not take responsibility for whatsoever. What it is, guys, Sticks FX speaking, and today this is the first video of the intermediate level of the mentorship. And if you're not in the mentorship as yet, I'll drop a link in the description. Check it out. And then of course it's free, you know, because I'm a good guy. And of course maybe I'll try to, after the end of this mentorship, I'll try to create a paid mentorship. You feel me? Like where I go specifically as like being like there for you every time, because you obviously paying me for that. You know what I'm saying? And for this free mentorship, I know I haven't been as much consistent as I should be. I don't have to be consistent, by the way. I'm just doing this from my generosity. You fool me? Alright. So today we're gonna be talking about the composite man. You fool me? The composite man. Let me see if I can just pull out something that can help me. What's the name of that shit again? What's that thing, bro? Yeah, there it is. Why are you taking out the whole space now, bitch? You think this your mama house now? The composite man. Bro, I misuse my phone because I can't even write shit. Oh my god, bro. Okay, let me just thickness of the pen. Okay, let me just use the whole screen because it's getting. Okay, no. Why is that shit too thick, bro? How the fuck do you write at a mouse, bro? Composite. Composite. Bro, I ain't never writing shit again with the mouse. The composite man. Alright, forgive me for my shitty drawing. I'm writing with a mouse. Like, bear with me for a sec. Alright, the composite man. Now, there is this great trader in the, I don't know what year it was, the 90s or whatever. That's a really good stock trader, investor, specifically in stocks. I don't know if he traded forex, but his findings or theories or specifically based off of stock trading or investing. All right. Now, his name was Richard Wyckoff. Richard Wyckoff is the man who came up with Wyckoff, as you can tell by the name. Like I said before, we go into Wyckoff and talk about it, but not today. This video is not about Wyckoff. This video is strictly about the composite man. Now, Richard Wyckoff came up with this phenomenon of the composite man. he referred to what moves this whole price action or what influences it as to one particular individual, and that individual was the composite man. His theory was that this whole price action is moved by one nigga, one man, the composite man, sitting in a dark room with his big computer screens, screens all over the whole room, just punching billions and billions into the market, manipulating the shit out of y'all. You know what I'm saying? Just grabbing your stop losses and all that shit. You know, it's okay. It's not really a man in a dark room, but it just refers to all the factors, all the economic shit, all the um, politics, all the banks, all the central banks that move this price action. You refer to it as one particular institution or individual as a composite man. All right. Now we won't go deep as to what Richard Wyckoff explained in his theories. All right. Let me just check if this camera is focused on that shit because I don't trust. Yeah, that's about it. Because that would really suck if I'm just speaking and this camera just focus on the earphone right here. But again, either way, the composite man. Now, we, we want to talk about the price movers as one individual as well. It really doesn't matter. You can call him the garbage man, the whatever. Alright? You can even call him the boogeyman. But we just keep it professional. We call him the composite man. Alright, babe. Now, I'm not gonna be talking about price action or analyzing. I just want to keep this as a background because it is what we were talking about it anyway. I can see I'm not connected to my Wi-Fi. This is why I cannot show. Alright. So we all know that there are many factors that move price action, from politics to economics to central banks and all those factors that move price action. Now, the main mover or the main price action mover is central banks or the composite man, the institutions, the composite man. You feel me? Now, the composite man is the one. Let me see. Oh no, Wi-Fi network. Okay. Alright. Where's my drone sheet? Now, the composite man is the market mover. Alright. Now we get price action moving something like that. Price action moving. We all know that price action moves like this. Okay. Price action, retail price action. You understand? And then composite man puts in billions. Okay, wait. I'll try my shit to be neat. Composite man comes in with his billions and billions and billions of dollars, and makes this huge candlestick in the market. After that, retailers. After that, price action continues to be normal, like that, like that. This is normal price action. Maybe a little doji over there, a little consolidation, you know, and a few drops from regular price action, from the buying and selling of retailers, you know, and all these um small institution, you know, small institutions like that. And then Composite Man comes in again, bro. Composite Man comes in, manipulating the shit out of y'all. Then we move. Composite Man comes in like that, and retailers come in again. Smaller doges there and there. You understand? So my point is, these big moves. Okay, let me change the pen. The point is, these big moves that come in the market, these big moves, it don't matter if it's bullish or bearish. This is the footprints of the Composite Man. You understand? Now, the Composite Man has a job. His job is to sit in his dark room full of computers and make money. You understand? The Composite Man, you can consider him as a trader as well. But obviously, he doesn't trade. His micro lot size is 0.01s with a $10 account, $100 account. No, no, absolutely not. The Composite Man sits in his dark room with billions and billions in capital, opening about 200 lot sizes, even 1,000. You know what I'm saying? The risks, the risks that he takes is just unimaginable. That is why when you open a position, something like this happens. Something like this happens when the Composite Man opens a position. You understand? And the Composite Man is constantly buying and selling. Why is he doing that? Obviously, he's trying to make money out of retail traders. Write that down. The Composite Man is actively buying and selling. Let's say the Composite Man bought over here. Alright, he bought over there. Why? Because he wanted to sell. He wanted to sell, and then after buying, he had open positions over there, and then all of a sudden he sold hard, manipulating the lows, taking all your stop losses. So a bunch of liquidity. Right, liquidity. We'll talk about liquidity too further on. So stop losses. Takes out stop losses over there. Right, taking out stop losses. Now he had open buy positions over there, so those positions had to be closed. See, notice this rejection over there. Now this is what we would call an order block. That right there is what we would call an order block. And now order blocks are not necessarily a must that price would reject over there. You probably heard of them before, but the theory behind order blocks goes very deep. You understand? Right? Like I said before, the Composite Man has a job, and his job is to sit in his dark room with full of computers and sit there and make money. Now the Composite Man already has billions and billions. Why does he need more? Well, obviously, to maintain $1 billion business, you need fuck that shit. To maintain $1 billion business, you need billions. That's a punchline right there. I just created that shit right now. Write that shit down. To maintain $1 billion business, you need billions. Say, for example, let's look at Tesla. Tesla is worth about, I don't know, maybe for example, let's say Tesla is worth 100 billion. To maintain Tesla, how much do you need, brother? Just think about it for a second. How much in terms of expenses and all that shit? To maintain Tesla, how much do you need, bro? Do you think you need 1,000? Get out of here. You need billions and billions of dollars, bro. That is why the composite man is greedy. Composite man needs money to maintain. Remember, the composite man is not just a person. We're using that just for example purposes to make this shit a bit more simple. The composite man is like an institution. An institution like central banks and all that shit. So the composite man has a job to make money. And how does he make that money? Manipulating the shit out of retail traders. Most retail traders would have seen this as a what? Support. Alright. No. Oh my god. Oh, bruh. Fuck that shit. Most retail traders would have seen okay, maybe let me try again. Okay, most retail traders would have seen this as a support. Right? Support. Now the composite man, okay. We know that if you see a support as retail traders, if you see a support zone, we sell or resistance. Yeah, this is the resistance. I don't trade retail, so I might forget from time to time. So this is a resistance. Resistance right there. Now obviously we would have our stop losses above this resistance. Notice what the composite man does. He goes above the resistance zone to take out the stop losses of retail traders. You understand? And after that, he just completely drops price over there, drops price down to the face of the earth. Why does he do that? He bought over there. Look at this, guys. This is where it gets interesting. He bought to sell. Write that shit down. The composite man bought over there. Why did he buy? He bought right there. This is that blue candle over there. The composite man put in, let's say, $10 million. Okay, let's say he put in $1 billion over there to buy a price, to make sure that price breaks this resistance zone over there, to make sure that price goes above the resistance zone. And then once price did that, he then did what? He opened another position. Huge sell-off right there. This is not retail. To see the footprints of a composite man, you see these big candles over there. This is not retail price moving. I mean, retailers cannot create such candles. This is the composite man right there. This is what we call the footprint of the composite man. Now, we don't want to be against the composite man. We want to work with the composite man. Now the composite man bought over here. This is what we call a buy to sell candle. Again, like I said before, he bought over there to sell, and then after selling those buy positions over there, they still needed to be closed. You understand? they still needed to be closed. Right over there. Those back positions needed to be closed. Alright. He bought to sell. From that open of the candle to the close is an order block. You understand? And by doing that, okay, he bought to sell, right? Let's just draw this shit out. He bought to sell. Now these buy positions still needed to be closed. You understand? Now, if you have been watching the videos that I put up, you'll see that this is a structure break. The previous leg got taken out. Right over there. Right over there. The previous leg got taken out, which means we are now bearish. I'm not gonna try and explain the concepts of legs now, because I already done it several times before. You can go check out my previous videos. Alright. Now that was a structure break, taking out the previous leg, meaning this is now liquidity. I posted about this on my page. All these lows are now liquidity because price took out a major low. Notice how this liquidity gets taken out. Now this is what we call a mitigation. This is what we call a mitigation over there. And we'll talk about mitigation later on. Not now, because this video is gonna be 50 hours long. So now, what you would have done is something like this. This would have been your risk. Bro, I'm trying to throw that risk to reward thing. Alright, good. Okay, let me stick up opacity. Beautiful, beautiful. What is this? Fuck that shit. Duplicate that shit. Yeah, beautiful. This is what I want. Splendid. Go back to my pencil. Good. Now you would have something like this as an entry. I know we haven't talked about order blocks as yet, but this is just like an introduction of following the composite man. You don't want to be against the composite man, because if you were against the composite man, you would have got taken out over here, because you're trying to find the resistance. But like I said before, I'll try and quote a post from my page. So if you're not following my page on Facebook, you wanna go and follow that page right now. I might just try and put a snap of the post on the screen right now. It goes like this: if price takes out a major low in an uptrend, the rest of the lows are liquidity, or as it vice versa. If price takes out a major high in a downtrend, the rest of the highs are now liquidity. There's some hella sauce right there. I don't think anyone on the internet will give you that shit for free. So look at this. Look at that. Price. Okay, let me try it. Okay, let's use black. Right there. Fuck that. Price took out a major high, a major low, in a bullish trend. Invalidated a previous leg. If you don't know leg invalidation, check out my previous video. Taking out the major low right there. Meaning that the next low is now liquidity or a target. So basically, what you could have done, you could have even extended your you could have fuck is that, bro? So you could have extended your risk to reward right there. Beautiful. So this bro, it's kind of hard to use this app. Just bear with me for a second. This is my first time using this app, so just gotta bear with me. I know why it's not straight. Okay. Shit, trying to fuck me up. So this would have been your first partial. Alright. I don't know why it's so big. This is the smallest font I can get. Second. Alright. Like that. Why is this your first partial? This is your first target because price had to take out the low, because price failed to take out the high. Okay, now I know I'm getting a bit too deep, but let's just keep it simple for now. Price break out the previous leg, and your leg was created. You want to catch the reversal of that leg within the range. You want to catch the reversal and target the leg of the foot of the leg, and then you want to target the next liquidity, which is that leg. So this could have been an easy I know a 1 to 5 or 1 to 6 risk to reward ratio. which is something beautiful. Just trading off of the composite man theory. All right. So this was just an intro to all the blocks right there. Structure points. We know structure points. I'm not even gonna go deep about structure points, and that's a manipulation of the highest liquidity. We also get into that. This is target. Now I can spot many places where retailers would have been stopped out by the composite man right here. First would have been okay. This would have been a beautiful head and shoulder right there, right? This would have been a beautiful head and shoulder, but as a support zone, this would have failed. Spot this breakout, think it's gonna retest and go up. Now, you feel me? Liquidated. You think maybe price could try and bounce off of this and create some kind of a double bottom. You got liquidated because you're stupid. You know, I'm joking. All right. So I'll just cut this video, wrap this shit up for now. We'll get into it a bit deeper. This was just an introduction. You know, this is the first video in the intermediate level, and it wasn't. I hope it was helpful. All right, and I hope who was Jessica? I hope your question got yeah. I hope your question got answered. We will still get into liquidity in much detail. So yeah, drop a like, drop a comment, subscribe. I really appreciate it. You know, I bet. Peace out.